Hello friends, today we will discuss balance of payment. Myself Ashish Srivastava, MS Ghaziabad University Courses Campus. A very important point like balance of payments is a very important topic for in any economy. The balance of payment is a statistical reports in which a systematic form it is summarize the data on international transactions of residents of the country with resident of the other country non-resident known as for a certain period of time. It is a very important topic for any curriculum. I think while talking about the international trade, international financial management, you'll have to discuss about the balance of payment, balance of trade. So today we will take a short of time and we'll discuss about the balance of payments and its components like current capital and structure of the balance of payments. Balance of payment is one of the most, as you already seen, the balance of payment is one of the most important concept in international economies. It is studying allow giving generalized assessment of the economic situation of the country, the efficiency of its economic relations. This model is made for the purpose of developing and implementing a reasonable exchange rate in foreign trade policies, analysis and forecast of commodities and financial markets. Based on the evidence of the balance of payment like by international financial institutions, which is known as IMF, decisions are made about the granting financial assistance to a specific country to stabilize the balance of payment and to deal with its deficit. Now, structure of the balance of payments. Here, it's a double entry bookkeeping system. Balance of payment always statement listing receipt and payments. So we have categorized these balance of payment into two main heads like current account and capital account. And the basic difference between the two is that the former represent transfer of the real income while the latter records only transfer of funds without affecting a shift in real income. Current account and capital accounts. We will discuss here. The current account records the transactions in merchandise and invisibles with the rest of the words. Merchandise cover the import and export and invisibles, which include trades such as services, investment, income, unilateral transfer. Unilateral means what? Unilateral means unilateral transfer include pension, remittance, gift, and other transfer for which no specific services are rendered as they are represent flow of fund only in one directions. So current account receipt include export and import of goods. If we are exporting some goods to other economy, we will receive the payments which comes under credit side. If we are importing some goods, so we have to pay some amount which will comes under debit side. So similarly, export and import of services, similarly in invisibles and non-monetary movement of gold. Yes, that is very important point, monetary movement of gold. Monetary movement of gold is the sale or purchase of the gold that influence the international monetary reserve, while non-monetary sale and purchase of gold like is done for industrial purpose. The basic difference, if you are the central bank are purchasing gold, that is count under the as a reserve. But if we're talking about the industrial purpose, if we are buying gold, that is shown in the current account either separately or along with the trade in merchandise. The sum of these components is known as yes current account balances, and negative number is called current account deficit and positive number is called current account surplus. If export, there is an important point is always you have to remember, if export exceed import, the balance of trade turns surplus. So before going through this, we need to understand the balance of trade. Yani, what it means, export of goods affect flow of foreign exchange into a country while import of goods causes outflow of a foreign exchange from a country. So the difference between export and import known as balance of trade. And earlier we had discussed that balance of payment, that is difference between total inflow and total outflow in terms of money. So if export exceed import, balance of trade turns surplus while excess of import over export result into deficit balance of trade. Now capital account, that is very important thing. Capital account transactions on the other hand, it's comprised like long term and short term inflow and outflow of the funds under the capital account like double Entry system, receipt and payments head, in which we include foreign investment, loans, banking capital, rupee, debt services, other debt capitals. While talking about the loan, already I have mentioned loan include the concessional loan received by the government and public sector bodies. Long-term loan and medium-term borrowing from the commercial capital market in the form of loans, bond issues, and short-term credit. Disbursement received by the Indian resident entities or the credit item, while payment and loan made by the Indian or the credit items. The credit side record the official and private borrowings, while the debit side include that is investment of the capital invested into the economy. While apart from this current and capital, we need to, I think we need to understand the error of which is known as statistical discrepancy. That is very important while collecting the data of inflow and outflow. So there is some kind of errors, which is comes under error of omissions. And official reserve collected by yes, while talking about the central bank, which include SDR allocations, net official reserve, and monetary authority by the monetary authority of the country. Every weekly basis, you will get the data from RBI website, and also mention which we will discuss later on in details. These are the basic methods which you can calculate, like how to calculate. Always comes these kind of practicals you'll get in the exams. How to calculate balance of trade, how to calculate balance of current account, balance of capital account, overall balance of payments. So these are basic difference. Balance of trade, simply export of goods minus import of goods. Balance of current account, yes, obviously balance of trade plus net earnings on invisible, which we have already discussed. Balance of capital account, like foreign exchange inflow minus foreign exchange outflow on account of foreign investment, foreign loans, banking transactions, and other capital flows. Overall balance of payments equal to the balance of current account, balance of capital account plus statistical discrepancies. Statistical discrepancies, yes, while collecting the data, you'll get these numbers. Thank you so much.